Okay, so we'll start the second session of today, and the presentation I would be sharing on one of the opportunities I saw for the next few years. And just remember, till now in ALD sessions, I've shared around 7 to 8 stocks. Two of them has been down by 40-45%. Two of them has gone to 2x. One of them has hit 4x to 5x from the time I shared. So success ratio is quite low from my side, and there is a big chance of having a loss in case you are not doing due diligence from your side. Only thing which I'm looking for is, so I keep on turning many rocks and trying to figure out if I can land upon something good for myself and then carry on. That's the whole idea here for myself. So the opportunity that I'm going to discuss today is on the recycling industry. Last time also we touched upon similar theme and it went down by 40%. Okay, so don't blame me for this. So company that we're going to discuss today is a waste to wealth company. Market cap is around 1500 crores. This current price is 838, ROC 28, ROE 31, pledging 0, debt to equity is less than 0.5, and stock PE ratio is almost 34. And if you possibly would have judged, I think the name is Tinna Rubber. When we're talking in the morning, right, about where the stock is in its journey, that should help us to decide what it can do. And if you can see, this is one of the stocks which has done almost 300 times. 300 times it has gone up from the lows. It's a staggering number, right? We are talking about 2x, 5x, 10x. It has gone 300x almost from that point. So be a little bit careful. There it is in journey, and be patient about listening to the thesis and why I'm still bullish about this stock. So Tinna Rubber is a pretty old company, around 445 years. It is into industry. It is one of the Asia's largest recycler of end-of-life tires. The specialty, it recovers 99% material from the end-of-life tires. So you give a tire to them, they make sure that everything is pulled out and reused, and now convert them into a specialized and high quality recyclable material. What they do with this material, they make crumb rubber modifier, crumb rubber modified bitumen, polymer modified bitumen, bitumen emulsion, reclaimed rubber, ultrafine crumb rubber, and cut wire shorts. Domestically, they are present in major industrial hubs. Internationally also, they are exporting to many countries, but slowly they are trying to do geographical expansion as well. They have 6 plants overall, 5 in India, 1 in Oman, and slowly one more plant will be coming up in other country as well. In terms of crushing capacity, they are roughly around 185,000 metric tons at this point of time. And in next 2 years, it is going to be expanded by roughly 35%, which is 2.5 lakhs metric ton. Volume of tires processed is around 1.34 lakhs metric ton. So still capacity is not fully utilized, but promoter is trying to expand more further. I hope they're definitely looking something more bigger. In terms of facilities, you can see India and Oman, which are covered in the blue ones. So Oman is here almost small blue dot. These are the major manufacturing facilities. The green ones are the ones from which they are importing the tires. Why they need to import the tires? That is another question that you can keep in mind. In India, do we have less number of tires to be recycled, or it is the cost? So what they're trying to do is they're trying to diversify the sources of the ELT. ELT is the word which I'm going to use again and again for end-of-life tires. So they're trying to diversify the sources of ELT to the scope where the cost is minimal. So they need to see wherever the cost is getting minimal, whether domestically or internationally, they're trying to get the tires from there. In India itself, if you can see, they are spread across multiple regions. and each of these regions have different kind of facilities. Important is they are qualified for most of the global certifications, whether it is ISO or recycled standard or REACH, they are all qualified. So from this part, they are well covered. Now, what they do with the tire? So once the tire comes, they crush it into rubber and they also get steel out of it. When they crush the rubber, they do this 80, 120, 120, 140, 170 kind of a mesh, micro ionized rubber products. It's a very small, thin, fine graded mesh basically. And they are one of the unique players who can do to that extent with a high quality. We need to understand the more finer the quality, the more better is the output product out of this, recycled product out of it. That kills the difference between a virgin product versus a recycled product. It depends upon the fineness of this rubber itself. The steel which they are getting back, they are making into bead wires and scrap. They are also able to sell further. And from these bead wires, they are able to use steel abrasives or the cut shorts. Now, where are the applications? The road is their biggest application. So they're using this rubber mixing with bitumen and supplying to the oil marketing companies for bitumen emulsion and putting it on the road construction. We'll come to know why this is a positive and negative as well. But if you see in India, road construction will be kind of an evergreen industry. It will not come down over next decade also. So this gives them some positive advantage to it. If this chrome rubber modifier is put in a bitumen and being applied on the roads, which makes the road long lasting, then definitely this will help government in many of these expenditures done in a better way. So road is one of the bigger applications. Apart from this, the consumer segment, like conveyor belts in the airports, on the railway stations. If you see the recycled tires, basically, so each of the companies now, when they're making a virgin tire, they have to use certain part of a recycled tire also. And with the EPR policy in place, that number over the years, it will go to 20-25% in each tire. And EPR policy, we discussed last time about the last company as well. It is extended producer's responsibility. So each of these tire companies have to make sure that their tires are recycled properly to a certain extent. And some of the quantity would be used in the new products as well. Then we have the steel scraps, gym tiles. If you go to the gym, you can see you have rubber mats. It is mostly made out of the recycled material. Then automotive parts, rubber pipes. Then you have your sports stuffs. All of these are the applications of this company products. Next is on the segments from which the major revenue is generated. We have discussed about bitumen emulsion, from which they're getting 46% of the revenue. And if you see over the years, the segment has been growing quite well. Industrial segment, where they are using this reclaimed rubber on the tires back. This segment is also growing well from the last 3-4 years. In both of these segments, the sales have been almost doubled or more in last 3 years itself. The steel segment, from which they're generating 20% of this is also more than doubled in the last 3 years. So these three segments itself covers your 90% or more as a revenue segment. Now, if you see whether this industry itself is growing or not in the next 4 to 5 years, this road construction and infrastructure industry, demand for the recycled rubber specifically. I'm not talking about whether the road construction sector will grow or not. I'm talking about the demand for recycled rubber in this sector. If you can see, the projection says almost 3 times in the next 4 to 5 years. Similarly, on the industrial segment as well, the estimation is roughly 3x for recycled rubber products. Third segment, which is on the sports stuffs, gym tiles, we can see that the demand is again 3 times. So all these 3 segments, which are major segments for the company, the demand is expected to grow by 3x in 4 to 5 years. Coming to international projects, Tinna has been doing successfully some of the expansion in South Africa and Saudi Arabia. In South Africa, they are doing a joint venture with Mubadala for doing export of tires to India. And phase 1 capex is already completed, and we can start seeing some results from March 2026. On the Saudi Arabia part, they are setting up a capacity of 24,000 metric ton there, and some of the results would be start showing in the next year from that. Third one is the Oman, where they have put a plant already, and it is running successfully at 85% capacity utilization. So this will be, and from this Oman, 40% of the total production is sold within GCC region. So this one will have a good impact possibly in the coming years. Some of this is already captured in the current sales and profits. So they are trying to expand globally in a quite aggressive way. Apart from this, smaller revenues are also coming from polymer compounding solutions, where they are trying to onboard multiple customers across packaging films, shoe soles, footwear, automotive components, and irrigation products. So this is rubber pipes, then something rubber in the automotive segments, something in the shoe soles to last it longer. So all this they are trying to onboard. Currently, this revenue is not more than 2-3%. I think it's less than 5% overall. So this segment has a good chances of growing up in the coming time. Apart from this, they are jumping into new segments, which is called as recovered carbon black. So this is less than 2% at this point of time, but this is the new segment on which they are jumping in. So they are trying to get the professionals on board, and they're trying to get the major applications. They're trying to see where they can put it. And if we understand the Philips Carbon Black or HSCL, you can see the kind of expansions those companies are also doing, Philips Carbon Black and HSCL. So they might be also looking in that direction from this segment, whether they can generate some revenue out of this. So product expansion, they are also doing, geographical expansion, they are also doing. Inherent business is by default growing. Coming to policy support, so government is coming with the EPR policy. We just discussed about it. So this will push many of the companies to use the waste to energy projects, as well as growth of tires recycling industry by using recycled rubber. Apart from that, sports infrastructure or industrial applications like rubber mats, tiles, this will keep on increasing. Footwear industry, so this the usage of recycled rubber in this specific consumer segment will keep on increasing. And third, based on this, there's a lot of how to put it, basically, if you can see, some of the companies have come up with the pyrolysis plants. So this kind of a oil which is being generated out of this waste. And there are many companies like ResGen and High Green Carbon and some other companies which are doing this. Now, Tinna can effectively utilize this, and based on the vehicle scrappage policy that you might have seen in the recent times, MST is one of the beneficiary out of it. And then even in Delhi some time back, they have told, okay, after 10 years, diesel vehicle should not be allowed. After 15 years, your petrol vehicle should not be allowed, and you have to mandatorily scrap it, kind of a thing, and then get some subsidy to buy the new vehicle. So all this vehicle will generate more ELT tires basically for us, right? And that will become cheaper for this company to acquire, and lot of dump fill in India can be avoided if we have this kind of companies who can recycle it better. And this company is doing 99% recycling out of that. So considering the policy support, I think we are on track for this industry. Now, what are the saving opportunities for those companies? So if we see in the passenger car radial tires, potential usage would be going to be 5% of this recycled material, and the potential saving would be 2%. Similarly, in the solid tire, saving could be go to 4 to 6% for the tire manufacturers. For the retreated rubber, it is again going to be saving of 4 to 6%. For the inner tubes, it is 5 to 7%. For the flaps, if you see in the automotive, right, there are flaps behind the wheels. The saving could be 8 to 10%. So by adopting for the EPR policies, the tire manufacturers will save roughly 3 to 4% of their cost itself. On the consumer side, if this kind of recycled rubber material is used, conveyor belts, cost saving would be around 5%. In the automobile profile, it would be around 10 to 12%, hoses 4 to 5%, mats and flooring 12 to 15%. So many companies which are into consumer segment having these kind of applications might save around 7 to 8% on an average on their cost, raw material cost. So policy is there, benefits to the companies are also accruing. Whether they reach this potential usage, that is what we have to see in the coming years. Whether it will hit in 3 years or 5 years down the line, that is where the catch is. So this we need to definitely watch for. So why I'm interested? So first thing is this company's proven its model over the years of 45 years. So the people who are leading this have been able to see the rough ups and downs of the industry. So they have been able to weather it through and successfully taken it forward. Now they are aggressive. So when we are saying is promoter is hungry, yes, promoter is hungry because they are building the base for the next level of growth. So they have done recently QIP of 78 crore at the price of 888. Current price is 838, which is very close to this price. Capex of 100 crore is planned for all this geographical and product expansion, out of which 50 crore has been completed, and rest would be taken in the next quarters. So they have a vision in 2028. They want to make sure that these international projects go well. Second, they are targeting around 1,000 crore sales. Current sales of the company is 500 CR. So they are almost trying to go double of this sales in next 3 years. That means sales itself would be growing by 25% CAGR. Profit coming out of that 25% would be roughly 33% CAGR growth. And if you remember my first slide, the company is available at 34 PE. They're trying to grow by 34% PAT, roughly at a PEG ratio of 1 at this point of time, right? EBITDA margin, they are trying to increase from existing 15-16% to 18%, targeting an ROCE of 25%. Currently, their plants are 6 in number. They're trying to do 10, and capacity we discussed, they are trying to increase by 30 to 40% within 1.5 years from here. Geographical expansion we discussed, product portfolio expansion we discussed, now customer addition. So they are trying to cater to all the consumers from different categories. So now coming back to your original point, right? When we are discussing about road segment is the major segment. Now with the road segment, there is a disadvantage also. Disadvantages in the rainy season, in the winter season, you cannot construct the roads to the extent which you can do in the summers. So there is a seasonality in the business. The 2 quarters would come good, 2 quarters would come okay kind of a stuff. Most of the people in the market are not deep researchers, so they will see, okay, quarter Q on Q is bad or Q on Q is good, while this company needs to be seen on year basis that way. That there gives some opportunity to people like us who understand this company that there is a seasonality in the business. Now, what company is trying to do to avoid that? Company is trying to diversify into consumer segment along with infrastructure. So they are trying to onboard more customers from industry, consumer, and steel sectors. So this is what if they can do, they will reduce the seasonality of their business itself. So I think you can go on mute, Pankaj. Yeah. EPR policy we discussed. Now, with this EPR policy, because they are doing the recycling, they have generated EPR credits in their balance sheet over the time, which is 29 CR in the last year. With time, see, going five years down the line, possibly this number can increase itself to 50 CR or more. So they can sell in the market. The companies which are not doing this green segment or recycling part, they can sell this credits to those kind of companies to compensate for the pollution they are causing. New businesses, pyrolysis and recovered carbon black, although very small at this point of time, but they will start generating significant revenue over 5 years. Strong clients, if you see the kind of clients they have, MRF, Apollo Tyres, Seat, JK, Indian Oil, Hindustan Colas, Alliance Tire, Yokohama, Hyundai, all these are credit rated A basically. So their receivables or the kind of money which is we can think of it as stuck, it is just delayed at some point of time, but their customers are A rated. So if they have a strong clientele and they have a good clients retention policy as well from that perspective. Now, what they are doing to save the costs internally, they are expanding their renewable energy to more than 3x so that they can save 3 to 4 crores per year in the expenditure. They have the optionality of using different types of ELT. So one could be normal tire, one could be radial tire, one could be bus radial tire, one could be truck radial tire. Each one has a different kind of materials and the strength. So they should have the capacity and ability to crush them. So now they have developed this capability and they are using and moving to those kind of segments where they have the optionality of using what kind of ELT to reduce their cost. And then they have the multiple sources of to import ELT in India. So this is where it can reduce their cost. Coming to fundamentals and technicals, if you see cash flow from operations are quite good, almost from the last few years. They are consistently, CFO is positive. If we see the sales in the 2017 to 21 are stuck in the range of almost 100 CR. Last 3 years, it is in the range of 200 and 300, and now it has moved to 500 crore range. So the company has already proven that it can scale the things up. So when they're saying in 3 to 4 years they can hit 1000 CR sales, it gives me a little bit confidence that they have done it in the past and they can go in the future as well. If you see whether they translate the sales to profits, so till 2021 they are not able to do it, and going forward in 2022 onwards, they are able to manage it pretty well, and the profits has been consistently growing. Coming to their cash conversion cycle, which is well in control. So this is one part which has led to some profitability, the cash flows, the kind of business they are able to do more with this. So definitely improving their balance sheet in terms of capital, cash conversion cycle and working capital days help them out. And then their ROC has already improved to a good extent. So this is a good snapshot of cash flows. And if you see their OPM or NPM or tax rate, quite stable. Debt to equity less than 1, pledging is nil. And they've shown this growth in the past. And the numbers which we have taken is lesser than this. We have accounted for the 33% in the next 4 or 5 years and 25% sales in the next few years. So we are not even aggressive in those calculations, and the company is also not showing that aggression while sharing the data with us. Considering the promoter holding, they have quite a good skin in the game, 67%. Strong ends are also holding around 7%. So all these banks, Bank of India, JM Financial, ICICI, have got into QIP around 888. So they are again meeting the management in the next week. So possibly some inputs might come from there. And if we see CWIP, capital work in progress, that is increasing, signifying the expansion or the things they are trying to do in the capex. Borrowings is one part which is increasing. Last quarter it has come down to some extent, but we need to keep track whether after the expansion is done, whether they are able to do it well or not. QIP purpose was to reduce some debt. It is showing up here. We need to little bit monitor further on this. Technical analysis, I am starting with a monthly chart, and we can see that it is continuously falling from last July, and it has come to a level where the price is refusing to go down. From last 1, 2, 3, 4, almost 9 months, it is oscillating between 750 to 1050. And it is refusing to go down. Most of the candles are neutral, dozy kind of a candles. So there is a big absorbing possibly is happening during this range. And if you see the last, when we are talking about these 3 months, the volumes is almost nil on monthly basis. When the price started to catch up, little bit volumes come more. And November, again, when it is coming down, taking the support, volumes are almost nil here. So my feeling looks like the price is getting stable here. Sellers are getting absorbed. It is forming a kind of a base stage one kind of a thing. Until and unless it breaks 750 conclusively, I feel this could be a good base for this company in the monthly basis. So this monthly chart gives us a very, very good picture of where it is in terms of stage analysis. Coming to weekly chart, and I just a little bit zoomed more into that segment, and we can see that here also volumes have come down after this drop. So from this point in 2025 to this point, almost volumes are negligible. And when little bit push came, people are more interested. And last few weeks, when again some fall came, volumes again went away. RSI is almost close to the bottom over the years, and it shows that it's almost absorbing all the supply here itself. So this looks to me a good chance where we can also accumulate if we are convinced about it. Coming to risk, we discussed about the seasonal business. Second part is on the currency exchange, where due to imports, this could become a risk later. Change in technology might cause the company to replace machines, incurring some cost that can also become a risk in the coming years. EPR policy change, if government says, okay, fine, let's say the adoption of recycled material is not mandatory or they change some policy, it's a no-go for me at that point of a time. Second topic is on the natural rubber prices. So if the crude price remain low, natural rubber prices will remain low, and that will impact the company's revenue growth. So that can also impact this company actually. Sizable plant capex they have planned for 100 crore. Any delay may result in some increase in the project cost for the company. So these are the big risks which I can see of. So for me, the real moat of the company is one is their ability, second is the multiple sources with the clients, and third is the APR policy. These things are in place. I think over the years it can do well. What can break the deal for me? Any changes in the negative changes in EPR policy, or slowdown in the total road construction, or capex is not happening from government, or their own planned capex not going on timely basis, possibly kill my thesis itself, and I may need to exit at that point of a time. What about valuations? Company says they want to grow by 25%. I just took numbers at 20% only. And in 5 years, we can see a sales of 1250. Companies claiming 1,000 crore they will hit in March 2028. And going 2 years down the line, I'm still a little bit conservative here. And taking 12% net profit margin, PAT is roughly 150 CR by that time. And taking a ratio of 40 around that time, which is a PEG ratio of 2, because I'm assuming almost a growth of 20-25% growth. So this could be my selling point, where if these numbers become available very fast in the next few years before even reaching 2030, this could become a selling point for me. From this point of 1,500 crores, I am expecting market cap to be 6,000 crore in the next 5 years or before. On the negative side, what if they don't do well? I don't expect them to grow less than 15%, and net profit margin consistently is around 9 to 10%, which will still continue. So I am still seeing 90 crore profit in 5 years with P ratio of 20, not 40. I am expecting market cap of 1,800. So I will be losing a lot of time in that. And if we see last 1.5 years, we are losing time. The price is not moving. Like that, we can lose the time if this kind of situation may persist. Looks less possibility of this, high possibility of this. That's where my thesis is. So heads I win, tails I don't lose, but I lose time basically. So is it satisfying my criteria overall? Long-term industry needs, evolving landscape. It's a small fish, expanding pond, yes. Hungry promoter, yes. Fundamental ratios, pretty fine for me. Thesis is simple, risk is okay for me at this point. So that's why I am continuing this thesis basically. So that's all from my side. I hope you're able to patiently listen. And if you have any questions for this, please let me know. I hope you guys are still with me. I did not bore you.
No, Puneet, we are still here and we are listening attentively, taking notes.
Yeah. So
This
that's all.
particular stock is
Yeah.
never boring.
Is never.
This particular stock is never boring. It is every time presented. I mean, it has given always good numbers, good returns.
Yeah. It has come to a point where the things are getting stabilized. Rest is our luck on that.
One question, Puneji,
Yeah.
this year about the competitor or competition, because a couple of companies are there in the recycling industry. So, do you see any kind of competition for the Tinna rubber?
Yeah. So I can name few of the companies. One is GRP Limited. Another is LG Rubber kind of a company. High Green Carbon is another one. But none of these companies have this capability of 99% recycling to that extent. Second, if you compare the return ratios, ROCE, ROE over the years, Tina has done pretty well as compared to those companies. So that means they are able to use the capital more efficiently. Third, on the infrastructure segment and specifically on the tires, I think Tina has a lead over GRP. Both are on the similar market cap, but GRP is more diversified. So Tina is more specialized into that and building that moat further inside. So given a choice, I think among all these, over the years, I've seen Tina looks pretty much more solid to me.
Yeah. Okay. Thank you. One thing I noticed actually, because Tina has been following for a couple of years, I don't have in my portfolio, but this has already made a multiple return in past, but it maybe kind of in last 1 year or so, it has been under consolidation also.
So imagine what I'm saying is it has gone 300 times from 7 rupees to 2100 rupees. And
Right.
just by coming down, it has gone to 100x instead of 300x. But somebody who has bought it very low, right? He might be enjoying the fruits, and for him, it's still a gain. I still see this company can grow 4 to 5 times from here in the next 5, 6 years. But in the industry in which they are in, that segment is not going to come down. And the kind of companies with a moat, we have very less companies in listed form. So even if somebody gives me 10 years, possibly with the right numbers or the right sales growth, I think I could bet upon this company in the long run.
Yeah. Okay. Yeah, got it. Thank you.
Okay, that's all from my side. You can put more questions in the chat if you want to, and from there I can take it up. So I will hand over to the next presenter. Amar, if you are ready, I can pass on to you at this point. I
Yeah,
made
Puneet,
you
I'll take it.
host. Yeah, so guys, we have another presenter, Ram, but he has some fever and cold happened this last night, so he is not able to make it up for today. So we have shuffled one from the tomorrow session to here, and Amar has given us a good, I think, convincing hand. Okay, I will take it up today itself. Thanks, Amar, for doing it for us. Yeah, you can start. I can see your screen.
Okay. Just give me a second. I'm trying to put it in slide mode.
Sure.
Is the screen
Yes, in the presentation mode visible.
in the presentation mode, right? Yeah, some of the real estate kind of gets taken, so I kind of get thrown off when presenting.
Okay.
Yeah. So, Puneet, when you asked me whether I can take this 12:30 slot, I said yes, but you didn't tell me that I was going to follow you. And like, if I look at the five presentations before, talk about pressure, huh? Following all those rock stars. So I will try to do justice.
Yeah.
Another challenge for me is always the time given. 30 minutes, I think, is a bit of a rush. 40 minutes is what I at least look for. And I usually overrun that 40 minutes also. But then I will try to do justice and try to run through my slides.
Sure.
One disclaimer is I have prepared the slides in detail. I have put them almost like it's information overloaded, because when I want people to go through those slides, because Puneet shares those PPTs, that time you can go into more granular details, and any questions in the chat or later on in the group is how we'll go about it. So having talked about that, let me jump right away into the presentation because that time is already a concern for me. So I'm going to talk about TD power systems today. It is more into the power component kind of things where it is a big player in motors, generators, and those kind of things. So this first slide, and before even I jump into this first slide, if you guys remember the first presentation taken by Ankit, he talked about supply side dominance and he had a slide over that. And the examples where he provided some companies who has supply side dominance, TD Power was mentioned. I was so glad to look at it like, "ठीक है, at least somebody else is on my side thinking that this is a good company to kind of put our brains behind and get a thesis as to where we are on this one." So this first slide talks about the timeline, almost a 3 decades old company, 30 years होने को आ गया है. The two things which I highlighted, if you look at the highlights of 2024 and 2025, 2024 was the highest revenue and PAT since inception for TDPS, and they have repeated that feat in 2025. 2026 is a magic 8 crystal ball. हमको सोचना पड़ेगा कि how it will shape up in 2026, but then the way the management is confident, they are giving the statement. And when I look at the execution numbers, I think 2026 is going to surprise both 24 and 25 also. So this is the one-liner thesis कि things are changing. There is a concept called tipping point, right? It's a book by Malcolm Gladwell, where he talks about you kind of, some by design, some by luck, you kind of have put things in place where everything comes together as a whole unit and becomes bigger than some of the parts. And that is the tipping point where company goes into the autopilot mode and hits the hockey growth curve, right? J curve, which we talk about. So I will explain more in detail as to why I'm saying that. But before getting into TD Power, let me talk about the second slide, which talks about a AI data center value chain. अब ये होगा कि TD Power के बारे में बात करें, that is the company, then why I'm focusing on the AI data center. I thought I will spend 2 minutes over here because this is important. In today's day and age, AI is the booming sector, right? Everybody is kind of gung ho on about it. Look at the growth in Nvidia, Oracle, and some of the other hyperscalers. Everything is going through the roof. From a user perspective, for us also, it is a big boon because many of the analysis, if I look at it, it becomes much more simpler where I can crunch like huge amounts of data and get a summary and all. But from our perspective today, what we are trying to do, we go to like ChatGPT or Gemini, we kind of give our queries. When we form our prompt intelligently with a context, then we get a relevant response, which you can further leverage for our analysis. But that is the only user interface which we look at. It in the background. These are the major block diagrams which we talk about. And if you look at the bottom left, energy, when I talk about, this is where we focus, and that is where TD power systems fits in. We all know that AI is a very power hungry thing, and power generation is kind of supply demand देखेंगे तो demand is exponentially growing, supply is not coming up, not keeping up to the mark. They are not able to fulfill that. Why is that? What is the most common factor of energy for this AI data centers and all when we talk about it? This is the grid which provides the power, but grid has a finite capacity. They didn't anticipate this exponential growth and they have certain capacity. And if you want to add a new capacity to it, at best it's going to be like a 4 or 5 year. That is the best case scenario कि 4 or 5 years में मेरा capacity grid में बढ़ेगा. 4 or 5 year wait करने के लिए उतना time है नहीं. So what is the other things? I am talking about renewables, but renewables में भी transmission is a bottleneck right now. People know that it's a problem. They are working towards it. That's a different thesis where transmission companies will come to the fore. Nuclear is identified. Nuclear has kind of settled down by the major economies across the world, but now it is getting a revival. Why? Because that is one of the cleanest form of energy. But this time they are talking about SMR, small modular reactors. But उसको भी बनाने के लिए और बिठाने के लिए it is almost 5 to 6 years gap. But the demand is now. Supply तो आते आते आएगा. All this, look at it. So what are my options now? Then I have to go with the generators and those kind of things, turbines and all, right? In that, diesel becomes a no because their maximum capacity is going to be a 40 megawatt or 50 megawatt. That is the upper cap on that. In crux, the short story of that is, this is the place where gas turbines and gas generators and are coming to the fore. They are seeing a tipping point growth. The demand is huge. the companies are unable to meet that, are able to supply that demand. So that is where TD Power Systems, that is one liner thesis for me, suddenly has come to the fore, and the things are looking so rosy that they are already talking about FY28 capacities and beyond कि हम कैसे करेंगे क्या करेंगे, and even their end clients are coming from that focus. So like I said, that is the one liner thesis. Let me take you to the next slide. Like I said, this presentation will be sad, so all the slides are not going to spend much time, but these are some of the offerings. TDPS, apart from gas generators and gas turbines, it is also into different things. It provides synchronous motors mein hai. Then it is into, apart from gas turbines, it is into hydro, and it is also into steam turbines and all. All these are different opportunities, different business units within TDPS, and everything has its own focus with their own management team leading, and they have that P&L targets and all. So they are going all great guns across the subunits. But the star of the show, which is the thesis for me, is going to be the gas turbines and the gas generators. Moving on to the next slide, I have already talked about this, so not spend much time on it, but look at the last statement. Nikhil Kumar, Managing Director, you have to see some of his videos on YouTube. He's a rock star. He looks very calm, poised. He has a very soft voice. But then when he comes about his targets and all, he's absolutely dynamic. So here he says market conditions are similar in all segments except for the gas turbine and gas engine business, which is completely turbocharged and demand has increased dramatically. That is what I was talking about in the previous three slides. This is what Nikhil also has managed, and he goes on, like I will address to other points in the coming slides. When we talk about obsolete, I also kind of briefly touch upon it, but there are steam turbines, which is always already contributing 10 to 12% on the growth side. This is going to be a steady business for them. Hydro, they are suddenly getting traction, and the major part of that is in the export side. The two countries which are coming to the fore, one is Nepal. Nepal is a no-brainer because Nepal is very kind of it's a natural and scenic kind of blessed with scenic places and waterfalls and all, right? So it becomes a very good candidate for hydropower, and that is where Nepal is coming to play. But Vietnam is the second one, and apart from supplying the machines for the new systems and all, the major contract which they have earned now and they are kind of like getting into the execution mode is for the OEM kind of thing where they are taking the maintenance of those existing things also and with high margins. So hydro management on record says that FY27 is going to be the record year for hydro where we will beat the past all earnings. So that is another opportunity. Motors and railways, when we talk about it, major clients again outside Europe and USA, they have already provided trial units for US and we are talking about transaction motors and those kind of things here. So already it is with the client, it's in the POC mode and once successful. Most of this business for TDPS, it's asset heavy, right? Those machines are huge and all. And the way the execution happens is they kind of develop the machines as per the requirements of the client. They will optimize it. They will give it for POC. The client uses it, and while it is still in use, because that is itself is going to be 2-3 quarter kind of phase. So 6 से 9 महीना चला जाता है. They don't wait for that. They will start placing orders, and those 3-4 quarters, if everything goes good and they look at the quality and everything, that is where the bigger order starts flowing in. So there is always a kind of around a year or 18 months of gap before the actual big orders start flowing in because that is till that time it's in the POC stage. That is what is happening currently on the motors and railway side. I already talked about gas turbines and gas motors which TDPS is having, right? And they are having a high growth there. Around 2 years back, TDPS invested and created a design center in UK, its own design center, and they started working on large generators with capacity of 150 megawatts. 150 megawatts is the demand of the industry right now when we talk from AI data center perspective. उनको उतना capacity लगेगा, and when someone gives a quality machine over there where they can blindly rely on it and then hit and run away with it, that is where the demand is and that is where the money is. Because these are huge machines. But at the same time, what they are trying to do, they are trying to bring it into more of a portable kind of size rather than the huge ones before. When I say portable, it is still going to be huge. But then when we talk about the containers like used in logistics and all, right? some of these new gas generators, gas turbines, they fit into the containers and they are a kind of a building block kind of thing. They are just ported to the customer place, and then within like 15 to 20 days, they kind of set up and everything. And in 15, 20 days, you are up and running. So that is where that instant power demand is trying to be met by these gas generators and gas turbines. Overall, globally, if we talk about it, there are only five major players, and out of which only one is not working with TDPs. Rest of all are. So Siemens is there. There is GE Vernova USA. There is Novi. In fact, Siemens has a technical knowledge transfer kind of tie up with TDPS, where they along with TDPS are supplying these mega generators. So that is going to be one of the opportunity. When we talk about the strategic market entry on the oil side, ADNOC. ADNOC is nothing but Abu Dhabi Natural Oil Commission. It's a big company, global company in UAE. There again, the machines have already been given that it's tested and cleared. Now we are waiting for the orders to trickle in. Initial orders, it will be kind of like again testing the waters kind of thing, in spite of a successful POC. But given time, those orders, that trickle will turn into a stream. And that is where like major we are looking at it. So these two things, remember when I talk about it and when I talk about the financial numbers and the management is projecting up the guidance, these two things are not taken into consideration. These are still on the back burner, and chances are that 2026, because of the way these things work, it might not appear in 26. But 27, this will be a major revenue stream if everything goes as plan and the execution is there. For example, today, TDPS is a 12,000 market share company with a management guiding for 550 crores, approximately 550 crores of quarterly revenue. So 550 बोला था, around 2,200 का yearly revenue हो जाएगा. But if this large generators with 150 megawatt अगर click हो गया, even one or two orders is going to be in multi-hundred crore. So that will be a big kicker, and things will suddenly they will shoot up. So that will is going to be a game changer. And they have already spent 2.5 hours back in the background trying to optimize these things and fine tune it. And the POCs have been happening with good results. So this is something which again I'm very positive on, and this will come as a surprise, and that is where it will hit. It will step up the game and it will hit the next growth curve. So why TDPS now means if there is such a demand, then why not? Because globally, if we talk about at this scale, there are not very large number of players, and whatever players are there, they are absolutely full to their capacity. TDPS being proactive from 1.5 years at least before they have started the capex. In fact, their unit 3 in Bangalore is now coming up. And you look at it on the left side, if you look at it, that also they are not waiting for the full kind of execution. Even the unit 3, the whole rollout of the plant, they are broken down into phases. October mein side 1 operational ho gaya. When I say operational, means things are running and it is earning revenue. Almost 33% is contributing. November, and which we are almost there, the commissioning of Shed 2 is done. Year end mein Shed 3 ho jayega. When we talk about Q4, मतलब next वाला quarters में Jan वाले में देखेंगे, it is 100% up and running and with 100% utilization because the demand is already crazy. So that is where I say that management's proactiveness that came to the fore. They did this investment, and because of that, they have increased their capacity. जो पहले वो लोग 1,000 to 1,200 crore का machines बनाने का capacity, that is almost doubled, and it has gone up to 2,600 crores capacity. And they are trying to do like Kaizen and other kind of things where they can do debottlenecking and optimization. So 2,600, they can up to 3,000 crore. So with this, by year end, they will have the capacity where they can have 3,000 crores of like machines and all. That is where I think they are getting a big market share from their competitors also, because competitors haven't been that proactive, and they will now start the capex. But capex बनाएंगे तो minimum में 6 to 9 months तो जाना ही है before a plant comes in, right? So this is the story where they have already built the capacity. They are able to meet the demand on a very fast turnaround basis. Second thing, the quality is TDPS has been in the industry from 2012 into this market, the gas turbine generator, and the quality has been well recognized by the clients. because in another slide I will show they have 7,000 plus installations already across the globe. So there is a clientele which is kind of like tied in the, it's a logged in client kind of thing, and the orders like they are able to make. And being in India, there is a cost effectiveness which also comes into play. So all these things is where we are talking about TDPS having getting to the tipping point because all things are coming into place. Okay, this is the slide where I kind of like talked about it. I should have taken you here before, but then we already talked about it. Currently, the global markets are for TDPS is in single digit. So there is a, when I talk about time and all, there is a tremendous opportunity ahead. They execute well as per plan. Things can really be a game changer. Moving on, this also I have already covered. Like the when I talk about there are like less than 10 global major players into this turbine generators and all. Out of the five, like four, I have named them like GE Vernova USA. And please get minded that GE Vernova USA, when I talk about and GE Vernova India, they are two different entities, and GE Vernova India is not having any kind of like have to do with this gas turbine generator. That's a USA listed business. So India में वो नहीं आएगा. So don't get into that कि ये India में listed है तो probably this will be our gameplay. Not on the gas turbine generation side. They might get some OEM kind of things from the parent, but that's it. So that is not going to be a game changer for them. So this is where we are. So relationship dynamic, and in some of these OEM, the relationship has been for there some time. So there is a kind of a trust and faith built in over a period of time, which bodes well for TDPS. Forward guidance I was talking about, like management has come to the Q2. In fact, Q1 FY26 earning call pay itself, like they gave a hint and alluded that when we give the Q2 FY26, we might up the guidance. And that was just the hint very tantalizingly put and they went away. This time's का quarterly call में they actually have gone ahead and done that. 1,500 crore का जो revenue guidance था for whole year of 2026, they have updated to 1,800. And 27 they are saying कि we will at least do 2,000 crore. So constant मेरे को एक growth path दिख रहा है which is kind of on the uptrend. But then you look at the comment of Nikhil in the at the bottom, which I have posted it over that current order inflow run rate of INR 550 crores per quarter. तो 2000 से 2200 करोड़ बोल रहा है. So when they say कि FY27 में 2000 करोड़ का बिजनेस आएगा हमारे पास, which is for sure within this gas turbines and generators only, they are still on the conservative side and they are cutting it down. क्योंकि 550 करोड़ का अगर मैं हिट कर रहा हूँ तो 2200 तो सिंपल मैथ में 4 क्वार्टर का हो जा रहा है मेरे लिए. And anything which comes up as a bonus, that is always going to be increasing. So we will take with this 2,000 crores, but then there is a possibility that this is going to be up and they will beat this. So we will see how it goes. We have to follow closely on the quarter calls. So biggest deal breaker, and this I will talk more in detail about all the rights, but tariff tantrums, that is going to be the biggest deal breaker. Kyun? Because tipping point is this gas generator and gas turbine business, and this is being generated mostly from Europe and USA. But USA is the one where most of the action is, right? And if it is going to be 50%, if it is a short-term thing, the end customers, they are understanding and they are taking up that load of 50% tariffs also. Today they are doing that. They said okay, for 6 months we can easily take that. And TDPS is on their side. They are very confident and saying कि अगर ये 50% का मेरे पास 25 या 30% होगा तो भी मेरा profit margin hit नहीं होने वाला. We have that bandwidth and we can still do it deliver. But 50% they say is going to be a deal breaker. क्योंकि that cannot be sustained for a long time. So what are the options which they can do? TDPS is already having a manufacturing plant in Turkey. It started as a distribution kind of thing, but distribution साथ में over a period of time they started manufacturing so that it becomes easier. So that is a backup plan B for TDPS saying कि ये टर्की का जो facility है, so we will start utilizing that, we will start manufacturing that, and from there we will export. Turkey today has only 15% tariffs. So मेरे पास इंडिया में 50% लग रहा है और टर्की में मेरे पास 15% है, तो that is where I still save my margins and still do my business on a profitable way. So that is plan B. Second thing, what is happening is when I look at the whole pie, when I say pie from a TDPS perspective, अगर TDPS मेरा 100% बिजनेस कर रहा है गैस जनरेटर एंड ये टर्बाइंस में, So 100% में 75% it is not doing directly to the end clients in US in the hyperscalers and all. It is going via the large OEMs. Almost 75% of the business is via the OEMs. Because today TDPS doesn't have the big megawatt generators, right? It is just getting into it. It is in the POC stage. These OEMs are the ones who are providing the turbine generators, and in tie-up with them, TDPS will provide the generators at the back. It will provide the motors. So it kind of plugs into piggybacks onto there, and the OEMs kind of export it to US. So that is where 75% of the business anyway is bypassing the tariff. बचा हुआ जो 25% है जो डायरेक्ट आ रहा है, that is where the thinking and reasoning is what to do about it. So that is where. So management is very keen saying ki we are Indians, so we would prefer to do business in India because the revenue should be here. And they are hoping by year end or at least by Jan, the first month of 2026, we should at least get a clarity on what is happening. But that is a big question mark because Trump is in the play and he can be unpredictable. He's saying it very mindly. अगर वो नहीं हो रहा है, so then we have a Turkey plant. So Turkey plant will be used for manufacturing, and then tariff drops from 50% to 15%. Right? Moving on to the next slide, this is the summary of installation which I had talked about. So total there are like 7,000 plus generators, 7604 generators, including made in Turkey generators. So Turkey there was a manufacturing facility already, but then the way management was saying they were on the plan to kind of like gradually bring it down and just make it as a distribution kind of marketing center kind of thing. But because of this tariff, they might have to do a U-turn and they might have to leverage Turkey. So next question that comes to mind is what is the cost of shifting the production to Turkey? Management has come out very clearly and said that was already a manufacturing facility. The cost will be very minimal. They have told it will be less than 5 crores, 1 to 2 crores they are thinking. But even if it go 5 crores, when we are talking about 550 crore revenue per quarter, that is pittance. So that play is there. Okay? Some part of that will be covered. Okay, so let's talk about the growth triggers. Why we are talking about TDPS today? Well, what is my thesis? Major part I have already explained. But there are other things also which are coming into play. Where, for example, if I look at export growth acceleration, part of that is the gas engine turbine only. But then they are also coming into the traction motors for railways. They are coming up with hydropowers for Vietnam and all. So that is one. Tariff migration via Turkey, I have already talked in detail. Hydro segment, I already talked about. Like I said, this presentation will be shared. That is the time where you go through each of the points and all. Any questions we can handle later in the group also. Motor and railway scaling we have talked about now. Capacity expansion is already ready, and they are saying that today, once like December end, the capacity comes into play, means it's up and running 100% utilization. They say that will suffice for 2028. But then the way the demand is coming from the client, that actually becomes a risk point for me because 2028 में अगर demand ज़्यादा हो जा रहा है 3 साल है ना, तो within 3 years if the demand is so much that the business is growing, they might run out of capacity is what I'm thinking. Today they are not thinking of a capacity for the next 3 years. So that becomes a slight risk, which I'll cover more in detail on the risk side. What are the strategic future bets? As I said, these are not contributing to the revenue currently. Revenue guidance is already very rosy and aggressive. But one of these things clicks when I talk about UK design center में 50 to 150 megawatt का generators. We talk about carbon dioxide battery storage or like nuclear motors. Some of these things click. This is additional revenue which is going to be kick in, which is currently not taken into account for the guidance. So that will provide a big boost. Biggest trigger of all at the end, which I have talked about, strong H2 order booking guidance. Once USA gives a clarity on tariff, then TDPS के ऊपर से जो एक now there is a hanging sword over their head, right? What to do about it? Do we leverage Turkey? Not leverage? Hopefully, in the next 2 months, if we get the trade deal is done and we get a clarity, then execution will become that much easier. Hydro refurbishment, as I said, the Vietnam said they are getting a large order book and it is already there. The order has come in. Now we have to look at the numbers coming in and getting into the quarterly numbers. So these are the growth triggers which we talked about. I will give a very brief blurb of Managing Director Nikhil Kumar. Like I said, when I was deep diving it, I went through so many con calls. I went to the YouTube videos. You have to go to the YouTube videos first to see the scale of like the huge scale of those machines which you are talking about. Unless and until you see the video, you are not going to get the implication कि क्या बन रहा है, कैसे बन रहा है. Second thing, you have to look at the body language of Nikhil and the clarity of thought he has, how he's going about the business, and that itself will kind of like tilt the thesis in favor of TDPS. So that's why I put a blurb here. So as a reminder, ki, when you are doing your due diligence, watch this guy also, how he is portraying himself. Quick SWOT analysis. Again, most of the points I have talked about, I'll not run through everything, but the biggest strength and opportunity today is the gas turbine and generator growth. Biggest threat is going to be the tariffs. That is the deal breaker. अगर वो tariffs में if we come on to the wrong side of it, that will obviously impact the growth and all. So that is the biggest thing. The things we can talk about, like competition, so is already there, but then they're a bit ahead of the competition because of the capex. The capacity has kind of like ramped up like anything, and since they can provide that faster turnaround, a quality product at a lower cost, 20-30%, they are better at cost than their international competitors. All these things is enabling them to take out the market share in their favor. So that is a strength opportunity also. But then the weakness side, yet threat side, में देखेंगे तो technological disruption might be there. One thing is that. Another thing is which we have not talked about, elephant in the room, because people have already talked about that कि AI is a bubble and it might burst soon. I don't think in the next 2-3 years it's going to be do that because it's at a very nascent stage and these things are only going to grow. And from a user perspective, when I look at and leverage my AI tools, I want more. I don't want less of it. I want more of it. And when I want more of it, people are going to contribute to the ecosystem. They are going to build these things up, and that is where like the whole progression starts, right? So there might be one or it's we will figure that out. But then the next 2-3 years at least, so that story is not going on. In fact, that is going to take just speed from here. So I don't think that is going to happen. So we will see how it goes about it. I will leave it at that. Move on to next slide. This is the risk we talk about it. First one, obviously, I have put one is the geopolitical. Tariff is unsustainable at 50%. That's a sure shot deal breaker. तो उसके लिए तो कुछ करना है, but they have a plan B of Turkey ready, where 50% drops to 15% anyhow. अगर यूएस के साथ में इंडिया का ट्रेड डील हो जाता है, that 50% even if it drops to 20%, management has already said कि even 30% भी रहेगा तो I'm going to execute from India only and we'll still make those profit margins. So that's a big plus. Macro risk I talked about कि AI अगर bubble है वो burst हो गया तो obviously that is going to be a risk because my thesis evaporates, right? Because that is where the demand is coming from. वो industry गायब हो गया तो then obviously TDPs will take a hit. Raw material volatility is there. So again, but I leave it at the management how they go about it, how they ensure that they have the materials and all. But that can become a bit especially when we are looking at the company closely from a quarterly perspective, that can become a bit of a snack. Regulatory risk always is going to be there because governments are involved and all. So trade tariffs, gas availability for power generation. India, especially if we look at it, now we are talking about data center boom in India and all. But today we don't have a very tangible and concrete gas sourcing contract or like some kind of thing in place. कि this is where it's going to be done. अब गैस जनरेटर्स बनाएंगे, टर्बाइंस बनाएंगे, मेरे पास गैस ही नहीं है. That pipeline is not there. I'm not able to provide that. So that is something which we have to work on. Government has to focus on it and enable it. Be an enabler there. That is not in the hands of companies like TDPS and all. They will be the beneficiaries of the law when it comes into play. But today, right now, it's kind of an opaque thing. So data center boom in India from that prism and perspective, if I see, is a question mark there. So we'll figure out like how things develop over there. But that's a risk over there. Execution side, I have mentioned it there, delay in large generator. This is something we knew which is being developed at UK Design Center, right? So it's already done. They have created the first prototype. It is in the POC with this qualification process is there. Once qualification is done and the orders start trickling in, even one or two orders like will take this stock to a different orbit. But It all depends on the execution and whether the customer, when they are doing the POC, they buy it what they are looking at. So that is how we will look at. Capacity constraint I already talked about. कि 2.5 to 2.8 crore ka, they are saying कि we are very comfortable with. We are, in fact, the strong language of Nikhil. He says we are not going to run out of capability or like this capacity. जो भी फेंकोगे, we will take. We are not going to be selective. Whatever comes our way, we are going to take. I am thinking if this growth goes up in this strong, aggressive fashion, 3K crore might hit before FY28, and that being the case, then they will have to think about the capex. Obviously, they will do it, but then we have to think about how they are doing it. Is it equity dilution? Are they doing coming up with a QIP? Are they coming out with warrants or rights issue? That we'll figure out what to is there. But then today, management is not thinking about it. That's something which might come 2 years down the line. But the constraint can be a hit because today they are reaping the benefits of investing early, doing a capex and increasing their capacity. So they are able to meet the demand and gain market share from the competitor. But 28 May, if they are complacent and say कि नहीं नहीं मेरे पास तो है capacity and suddenly they find कि it is fully utilized, 100% utilization हो गया, then the market share will be taken by other companies who have done capex in the interim. So that is why it is listed here under the risk. Currency fluctuation, obviously 76% is an export market currently for TDPS. Only 24% is domestic. So currency fluctuations will always be a risk. Operational low cash flow conversion due to rapid ramping of production. But it is a risk, but it is given because in the growth stage, all the retained earnings they have, they are going to invest back, right? So they are going to do a capex. They are going to come up in new plants. They will invest in the machineries and all. So cash flow to will take a hit until the time this turbocharged growth is going to be there. I don't think that is going to improve. Only thing is that balance has to be maintained that it doesn't go out of hand, and that I will leave to the prudence of the manager. I'll move ahead. So this is where I take my magic eight crystal ball out and say कि आज तो ये scene है, these are the growth triggers. फिर आगे क्या? How does it impact its revenue? How does it impact? And I come up, I dare like I say I will come up with some price projection also. Take it up with a pinch of salt because there are many moving variables. I am taken assumptions left and right. But this is where we are. Yeah, on the top, if you look at it, this is my base year data 2025 का. Not even Q1 and Q2 FY26. Q1 में जो मेरा close हुआ था, so my revenue was like 1,279 crores. उसमें 175 was my PAT and EPS was 11.2. 3 year forward outlook देखेंगे तो management has helped me here because 2 साल का तो projection उन्होंने खुद ने दे दिया है. तो 25 में 1279 था तो 26 में it's going to be 1800 which management says which is a 40% growth. 27 में it's going to be 2100 management has said 2000 but at the same side they said कि 550 quarterly revenue होगा so it comes to 2200. I took the median of it so I put 2100 over here which still is a fair enough almost 17% growth. 28 I am taking that leap of faith. I am saying कि 2100 का 2500 हो जाएगा. Execution अगर सही है so this shouldn't be that difficult to attain, which still says कि 20% growth होगा. And margin numbers have plugged in something over here. Based on that, I get my projected PAT and EPS over here, right? Now take this FY28 का जो मैं 2500 इधर लाया हूँ, I've taken that as my base case scenario. That is going to be my revenue. And then a bull case में I say कि they will do like 400 crores more, and bear case में I subtract that only. And based on that, I do my projections, and this is my year 3 APS. If I crunch the numbers and assign base case में अगर मैं 50 का P देता हूँ आज के डेट में it is 60 P. If you look at the top year 2025 में as of today it is 60 P. तो अगर मैं उसको 50 भी देता हूँ बेस केस में तो I am getting to the price of like 1200 plus. CMP is more like 750 or 800 में fluctuate हो रहा है. When I look at bull case 60 P दे दिया तो it goes more towards 2000. So bull case and base case I'm still making money. And when I say money, I'm making a decent money. Even in base case, I am almost reaching a 2x kind of scenario. What about bear case? Bear case में if I 50 का P जो मैंने base case में दिया तो drop होके 40 हो जाता है. And my EPS drops to 18 because I have dropped the revenue over here. So that price will come to around 760, which is my current CMP. 750 or 800 में fluctuate हो रहा है, right? So bear case में I will not lose money, but then it will be a 3 year का projection है, right? It will be a loss of time for me. So when I look at all this scenario from a fundamental perspective, I kind of feel comfort कि यहाँ पे growth है, price में भी decent chance of like appreciating a 2x or 3x kind of thing going forward. So this is how I have placed this slide. Moving on, technical analysis I have broken down into two, one the long term and the short term. Long term, if you look at it, some things are put on the boxes in the chart itself. Like when you get the presentation, you can look at it. But here, look at it, 45-degree growth since 26th May. There will be fluctuation. Obviously, it is stock price, right? But it is working on a very narrow parallel channels and it is respecting its boundaries. और this has been going for the last 5 years. 26 May 2020 से invest किया है तो it is constantly on the uprise. Stage 2 जैसा ही है if I look from that perspective. So that is something which bodes very well. Second thing is this particular 45-degree growth and look at the volumes. These are way above average volume. This blue line is the average volume. उनसे काफी ऊपर है ना. So and it is nearing all-time high. So it is in a blue sky scenario right now. So this is where how I read my long-term chart. Then this is my short-term chart. Short-term chart mein I have gone dropped into daily. I rarely come to the daily, but then weekly देखूंगा तो मेरे पास weekly और monthly में मेरे को ज्यादा difference दिख नहीं रहता. That's why I came to daily over here. So if you look at it, there is a gap up over here at this gap up of 690 to 720, which I have mentioned over here, acts as a very strong support. And again, it's respecting even in the short time frame the parallel channel, and we were somewhere on the center of that parallel channel. So upside में 1000 तो मेरा immediate target बन जाता है और 6 when I talk about this support 2 मेरा 650 हो जाता है, support 1 becomes 690. That is how I'm looking at it. But then I'm looking at much greater target than 1000 is where the whole thesis is kind of going towards, right? I'm on to the last slide. Puneet, I know means I have used up my 35 minutes. Can I take 5 more minutes? I would like
Yes,
to play
yes.
a video. You can,
Yeah,
okay,
yeah.
I'll go ahead. Yeah, I'll play. Just let me know whether you are able to hear the sound and all. It's not playing, right?
Yeah, no, it's not playing. We are on the conclusion slide actually.
Conclusion means yeah, that is where the video I had embedded. For me, it was working, so I'm not sure why it is not working now.
Just start once again. Let's see.
Yeah. Okay, now it has started. We'll give it a second or so just to see if we can hear the volume. If not, I will put this video in a drive and share with. This is a revision of like the whole thesis, what I talked about. But then this was AI generated, by the way, from Notebook LM, but it has come out very beautifully. That's why I wanted to share it here. But apparently it's not happening.
No, it's not.
Yeah. So I will share this. It's a whole thesis. It's actually progressing ahead, but the sound is not coming, is it? Sound also from my side, it looks good. Probably when sharing something is happening. I'll share this video separately.
Yeah, it's okay.
So that is my end of my thesis.
Okay, great. One question I think I've seen in the chat till now is if the shortage or demand is so high, why we don't have a competition there, or why this company is still struggling with so much less revenue at this time? Of course, future we know what you have shared, but how to see this scenario basically? While this other
No, all the international competitors, everybody is minting money right now. Everybody is up to their neck fulfilling the orders. It's not that only TDPS is the beneficiary. Everybody is sharing the pie and kind of, but then they are constrained by their like, what they can execute. The demand is far outstripping the supply. So supply side mein, there is a constraint. That constraint, because of the foresight of the management for TDPS, they came up with capex much before. So they have the capacity now to ramp up their execution speed. Some of the other competitors haven't been, but they will get their act together. They will do the capex now in next 1 year or so. That will come in. But in short, that is what I'm trying to say is almost all competitors, they are booked to their neck on the execution side of it. Everybody is benefiting.
Okay. And promoter is selling any view on that? So that is the only thing which kept me away for so many years from this stock. Every rise, I think he is selling.
Oh, but look at the chart. It's not coming down. It's just going up. And when I look at the thesis and all, it is going to further go up. So I will discount that. But I need to get more into it कि promoter sell कर रहा है तो absorb कौन कर रहा है, who has taken that stake and all. I'll get back to you with more details on that. But then I will have to join those dots there.
I think you are absorbing, right? People are telling you are doing more research than promoter itself.
Come
So
on,
you are
पुनीत आपके
absorbing.
सामने रहते हुए मैं तो ऐसा छोटा सा एक चिंदी हूँ. But then, as a disclaimer, I already have a stake in TDPS and I'm ramping it up. I usually almost always do a lot buying. I will not do it in one stretch. It will always be in tranches. But then in TDPS, I already built up a sizable position. But that is कहीं पे भी नहीं है मतलब. That's I'm not even very inconsequential. So I will have to figure out कि जब promoter बेच रहा था तो where that stake is going, where it is being absorbed. So I'll get back to you on that one.
Yeah, guys, any questions for Amar?
Yeah, Amarji, as usual, great presentation.
Thanks.
TDPower is something I picked up instead of KFIN last time, and since then it has already given me 50%. I mean, up. It is 50% up. The only
Yeah,
thing is from promoter point of view, even I dropped the presentation only from presentation point of view because the promoters were selling. But if we see at the FIIs and DIIs, the what has been sold by the promoters has been bought by the FIIs and DIIs, and since then it has been maintained the same way.
yeah. So
So
that was exactly my point कि अगर promoter sell कर रहा है, see, at times ना it can be a willful selling also because they want to increase the investor base and strong hands come in, no, that
yeah.
bodes well for the long term. But that is something which I'm assuming right now. I will have to do that due diligence and actually come up with the names and all कि कब बेचा और उसका stake किसने लिया and whether they are still there. That is my
Mm.
theory कि वो होगा बोल के, but I
What
will
was
confirm
sold
that.
by the promoters was bought by the FIIs. So this is what I found it when I was studying this stock. So
Yeah.
I don't think that should be an issue with this stock.
Correct. So one way is that, and that is was my assumption also कि promoter अगर बेच रहा है तो we have to figure out कि who is absorbing it. If they are strong
Mm.
hands and for long-term players, that bodes well for the company. First point. Second point, then we have to look at the corresponding price action. Price actions देखेंगे तो it has kind of like market has discounted that, and this is on its own tier away journey up. And when I look at the projection also, right, अगर 750 या 3 साल में अगर मेरा 2000 के करीब जाता है तो I'm kind of getting 2.5x returns kind of thing, right? So those two things, it's not a very absolute kind of a argument to that question, but constraint wise अगर मैं देखूंगा तो things are kind of lining up there. So that bodes well.
I'm tracking this from 6 months, so it has really given good results as well as fundamentally it is a very strong stock. It is my personal view, but yes,
Yeah, and
you
that is my
present it.
thesis also. Going from here also, no, it is going to be a that once the companies come to that tipping point, no, that is a multi-year kind of tailwinds which the sector and the company will have, and they will reap the
Yes,
benefits.
thank you, Manju.
Yeah, sure.
Rishi has one question. Rishi, can you unmute yourself?
Yeah, I mean, a similar observation as Rashmi. It was that the same thing that the change hands of it from the promoter has gone to FINDAs only. So that was the same observation. So yeah, I think it's going on good hands. The only thing that we have to say is who exactly is accumulating that stock, and good funds are sitting on it. I mean, Abu Dhabi Investment Authority Fund, then any other all different good funds are sitting on it. I mean, nothing to worry as of now. Vanguard and all sort of. So
Right, Richard. Thanks.
yeah.
Okay, so thanks, Amar. I think we should move to the next presenter. Any further questions, participants, you can put in the chat and we can take from there. So next presenter for us is, let me check it, Sacheerome, right? Sacheerome Bhagwan. I made you a co-host. You can unmute and start sharing your screen if you're able to hear me.
Yes, Mr. Puneet. Can you
Yeah.
hear me?
Yes.
Yeah, let me share my screen. Please confirm once you see the
Yeah,
screen.
we can see.
You're able. You can see, right? 1 second. Okay.
Yep.
Okay, let me start with good afternoon, everybody. Let me start with thanking Mr. Puneet for gathering all of us and making a group and helping each other to learn and in the investing community. And next thanks goes to the co-presenters. I have been in this group maybe I think from ALD5 onwards. I see some names like now we see Mr. Amar and Amit and Mr. Reshmi. These are the guys inspired me after watching the last 3 ALDs. Then this year I took a decision to present a company, and the company is into SME. It's a very small company. It's called Sacheerome Limited, and this company is into making of fragrances and flavors. Okay, basic details about the company. This is founded in 1992 by Mr. Manoj Arora. Okay, and this is into a specializing flavors and fragrances making company. And it was initially into fragrances, but later in 2014, it was with a dedicated R&D team, it has entered into flavors. And it is tied up with most of the FMCG companies in India and in the worldwide also. And it has one facility in Delhi, and now they are into making another plant in Uttar Pradesh. And this company is into mostly fragrances and flavors, which is being used in the personal care, food, and other perfumes premiumization category. When it comes to management, Mr. Arora, who is the founder and managing director, and we can see here the other company non-executive members and full-time directors. And overall, they have 30 plus years of experience and 54 R&D specialists and about 150 employees. The total capacity is 760,000 kg per annum, and the capacity utilization is almost 97%. This company, Sacheerome, is listed recently in June 2025. As we see, they are into two categories. One is fragrances and the other one is flavors. When it comes to fragrances, we see like a air care recently, and if you can observe in many areas when we go to malls or any shops, we see this type air care like air fragrances, and this is increasing. As I see, this is an increasing trend. And when it comes to fragrance like a fabric care, we are all using this like when we put it in a washing machine, we put washing powder along with some fragrances. So along again, there is a pet care. We see increased number of pet care. For that also, these fragrances are being used. Baby care, hair care, cosmetics, personal care, and fine fragrances, men's grooming. These are all different varieties where the Sacheerome is already involved in. And the second category is flavors. It varies in the bakeries, beverages, confectionaries, oral care, lip care. These are all the different areas where they are into under the flavors category. And here there is some projection industry growth, like 3% is overall the entire world growth expected. But whereas in India, it is almost double. Like it is here 3.15, whereas in India, growth is expected at 6.75 CAGR on an annual basis. And these are the basic fundamentals and revenue, how it is growing in the company from the last, because this is a new company, so we have only from the last 3 years. If you see how the fragrances is increasing, if you see 2023, it was 64, and now it is 104 at a good rate it is. And whereas in the flavors, we can see in 2025, there is a little reduction. And the other like some other scap, they are doing better, increased trend. And the top 5 customers are contributing at 49% and top 10 customers at 58%. And if you see domestic sales and the export sales, in 2023, the export is 3%, and slowly it is growing up. It is almost doubled in last 3 years, from 3.73 to 7.66, which is what they're saying, that export is going to be one of the growth in the company. Okay, let's see the fundamentals. This is very small company. As I see, this SME is a 788 core, and the book value is 60, and current PE is 33. And whereas if you see ROCE, ROI, and ROE, these are almost above 30, which is very good. And it is now, because of the move, I will show it in the later stages. The PE, 3 years PE was 20, but whereas present PE is 33. I will show you why this is actually the growth. And price to book value is little high, and debit to equity is nothing, 0. And the promoter is holding almost 72%. And DI is present, though it is SME, we see some DI is 6.2%, and FIS are very little. And here, as you see here, also the same shareholding. But here, the recent quarter results, they announced very good, I can say, super results. Due to that, everything yearly and quarterly results are very high. Sales 52%, net profit above 100, and EPS is above 50%. And if you see the key financials, revenue, as we see in the previous slide, revenue is increasing continuously from 23 to 25, whereas in the 2023, EBITDA margins are increasing, and PAT also increasing. If you see EBITDA and PAT, this is the trend, and the ROE is rising continuously from the last 3 years. ROCE is rising, and debt to equity is 0 almost, and earning per share is increasing. Okay, all the fundamentals are looking very good. Though we have last 3 years, it looks good. And here, as per management, the growth drivers are here, like expanding the personal care. As we see in a regular life, we observe in our daily life, like the increased demand in skincare, hair care, and cosmetics, fragrances, everywhere. Everything we see, like since morning wake up and start using the products, everywhere we use in skincare, hair care, cosmetics, fragrances, everywhere it is. And even the personal grooming, even not only for the women, even nowadays men's usage of increased grooming awareness is increasing very much. Food and beverages, nowadays whatever we see, it is including the fragrances and flavors in every beverage. And this is the main key thing. They said that export oriented. Now they are entering into export. Already we see almost 100% growth in exports, and now they are deeply involving in exporting to the Middle East and GCC countries. And they're planning to introduce some other new diversification products and different segments, like the same segments, but into food and beverages. And premiumization, if you see the QSRs are increasing, and Western and food increasing, and premiumization is increasing. So these flavors and fragrances growth will increase as long as this premiumization is increasing. When it comes to like strengths and weaknesses, they have 30 years of experience and the strong R&D facility, and R&D like 50 plus staff are there, and they have been experiencing high margins and high ROE, and the products are diversified into FMCG, all type of FMCGs. So these are the core strengths. And what is the weakness is, like as we see, the concentration is a little high, about 50%, or coming under the first top 5 to 10 customers. This is one of the weakness. And heavy dependency on the fragrances, because their revenues are coming mostly 95% from the fragrances. And another one is like it's a SME listed company, and it's the liquidity is low. And the opportunities are export growth. In the just previous slide, we see that they are trying to enter into GCC and Middle East, where the fragrances and the flavors usage is very high. And opportunities, nowadays everywhere it's a premiumization. Every product is a premiumization. This is going to be benefit the company and their expansion plans, and they're trying to increase the flavors also, the sales flavors also. This is one more opportunity. And threat is, as usual, like some threats like raw material cost, global competitors, and geopolitical issues, regulatory constraints. These are always, nowadays, we see Mr. Trump is making every day a statement, making the stock market volatile. So these are all the regular threats. I think these threats are everywhere in all the stocks. And when it comes to peer comparison, and I see there are few peers, not many, I find it. And peer comparison, when we compare, like most of these, as you see this green dots, small dots, in all these green dots area, Sacheerome is doing better than the peer comparison, like SH Kelker and Oriental Aromatics. And when we see growth profit is 25%, much higher than the other peers. And if you see average return 13%, whereas the others is doing 4%, 5% around. And the business is that even business also, flavors, fragrances is higher here. And location wise breakup, here they have only India is much, and the others is 7, whereas the others are already spread across the world. So here is the only lagging I can see in this Sacheerome, other than SH Kelkar and Oriental. Okay. The price performance, when we compare with these two, since it is listed in June, July, so it was almost okay. But in this last 1 month, the price jump is very high in the Sacheerome. The last, I think, not even 1 month, just 20 days. Okay, when it comes to technicals, it is trading at now almost 350 around, and PE is 35, whereas the average last 3 years, or since it is inception, is like about 20 to 25. And EBITDA margins are increasing, and the other operating margins and gross profit margins are also flat to increase. And this is the technical chart. It is listed in June. From there, it is continuously growing. And when I started observing, I see here this. I came to know about this stock somewhere around this year, and during this breakout, I entered after this like a pullback, small pullback here, and later on I added some more here. Earlier it was actually SME quantity was double. Later they reduced it, so I entered here, and during this breakout and here I almost made 60%, and I exited half quantity, and remaining left it for free. That's it. I am done from my side, and just want to make sure that I'm not very good at fundamentals. Just by looking at other presenters, I wanted to present it, and I made it as far as possible to make it clear. If you guys have any questions, I'll try to answer you.
It's great. I think don't worry about that aspect, whether we understand or not. The amount of jump you do, right, and amount of learning that comes with that itself is a booster for each of us. So,
Thank you, Puneet.
yeah. So I have one question for you. So why you think this margin is sustainable? This industry keeps on in a cyclical way, right? Few years it goes up, it comes down. I've seen that with other stocks. Have you thought of it?
Yes, actually, what I see is that I mostly, after reviewing these, I see that they're entering into GCC and the Middle East countries where these fragrances and flavors usage is very high. Very high, because I can say that I'm from Middle East, actually. I stay here. So I see everywhere, wherever I go, the fragrances and flavors I see. So if they can, as we see 23 to 25, their growth, export growth is increased 100%, 3.5 to almost 7.5. So whatever, if they can start increasing slowly as like 1% or 2%, I think it is going to add up much.
Okay. And do you see margins are more in flavors or fragrances?
I didn't go that detail. but
Okay.
we can see.
Okay. Yeah. Any other questions from the audience to him?
But now it is little bit extended in the last, I think, 2 weeks. So I think anyway, pullback come down to 260, 270, which is a good to look at it.
No, after you presented, it will not come to that point. There are 80 people waiting to buy now.
Yeah. Maybe as we see the recent last 2 days, the news and whatever Trump decisions, so maybe it may not come down.
Yeah. So jokes apart from that, any questions from audience to him? Okay, I think currently no questions for you more.
Okay.
Put in the chat, guys, if you
We
want
have
to interact further. Oh, okay.
one question, Puneet.
Yeah, Ajay.
So there is a one new listed company, I think Gem Aromatics. Do we have any kind of comparison with this business model in a similar fashion?
What is that, Mr. Rajesh?
Gem Aromatics, I think, yeah, there's a new listed company in a similar business model.
No, actually, I see JM, SH Kelkar and Aromatics. I see that close comparison. So I did only with those two. I didn't compare this one. I'll see.
Okay, yeah, they have very high link up with the US actually. So US is not good at this moment. That's what that is not performing, but they are all linked. I have done some study on the SH Keller and then Gem Aromatics because it's not performing. But I was not aware about this SME which you have today shown. That thank you to highlight that.
Yeah, welcome.
Puneet, if I may, on Gem Aromatics.
Yeah.
So Gem Aromatics on one side during IPO time said that they won't be impacted because of the tariff thing, but after the results came in, they said that they are heavily impacted because of the tariff thing. Second thing, their capex was supposed to get completed just after the IPO, which is yet to get completed, but the capex they're talking about expanding their capacity by 2x or 3x, something like that, and the interest cost and depreciation is hitting high on Gem Aromatics. So I don't know whether the product which they gonna come in with regards to this mint, their major product is mint basically, and they give this product to Indian companies like Dabur, those kind of companies for toothpaste and all these things. So are they gonna scale it up and make special aromatics in mint? Then it can do things and it can go better, but otherwise you have to wait and watch before scaling it up.
Okay, thank you.
Fine. We can stop this one.
Okay, guys. Thank you so much.
Thanks for attempting this, and we look forward in the next series also from you something more.
Sure.
It's the
Thank you.
interesting stock you have brought to us. Yeah, so we'll move to the last presenter of the day, Sunil. You're able to hear me?
Yeah, hi Puneet.
Yeah.
Can you hear me?
Yes.
So shall I share my screen?
Yeah, go ahead.
So is my screen visible?
Yes.
Okay. Yeah. Hi. Good afternoon. So I think it's already lunchtime. I think so. I'm not going to take much time. So I think I should be done in maximum.
You're bringing your fresh fruits to us, right? At lunchtime, fresh fruits. Okay.
Right. So yeah, so company is DSM Fresh Foods, and the brand is Zap Fresh. So I think you might have heard about Licious. So I think this Zap Fresh is exactly similar to Licious in terms of business, and they're the direct competitors. It a recently listed company, SME company. So needless to say, very risky for anybody to. So basically, anybody has to invest, has to make sure that. So company was incorporated in May 2015, so almost around 10 years old company. And so not much historical data available publicly, but still there is con calls happened recently, and some data available through their presentations, and a lot of promoter interviews available on the YouTube as well. And so market cap currently is 399 crores. So very tiny company. Current market price is 179. And so IPO came in first week of October, and the issue price was 100 rupees. So currently at 79% up from the IPO price. So business overview, it's online retailer, plus they have started to do some piloting on stores, actually, offline stores. Mainly online retailing, both the B2C and B2B is there. So they actually sell the fresh meat, packaged fresh meat, ready to cook and ready to eat non-veg products. And so it includes all these mutton, poultry, and seafood. And and they want to revolutionize the way customers experience and enjoy quality non-veg food. So I think their main USP is to provide quality, fresh, and less preservative, with no preservatives and no chemicals. Poultry and bread, which are bred with no hormones, antibiotics, those kind of things. So those are the main USP, actually. That's the differentiating factor compared to the unorganized market. So they actually sell mainly on the website. They're zapfresh.com, and they have a mobile application, Zapfresh. And so they both look very nice. Actually, I have downloaded them, and I've seen it. It looks they've done a very good job with the website and the application. And there are more than 100,000, 1 lakh downloads on the mobile application. Industry context, tailwinds, to give a context on how big size the market is. It's around 55 billion US dollars in India itself. So that's very huge, actually. It's kind of around 4.5 lakh crores market size, Indian meat market size, and it's growing at 8.5% CAGR. And so estimated is around almost more than double by 2033. And of course the growing protein market, the craze going up behind protein these days, lifestyle changes, nutrition requirements, and the and people are becoming aware that about protein deficiency in their nutrition. And consumption, the way it has increased from 2012, per capita increase from 3.2 kgs to 5.5 kgs. And so the CAGR is around 8 to 10%. And organized shift. So currently 90% is still unorganized market. So only 10% is coming through all this Zapfresh, Licious, Fresh to Home, and then supermarkets, hypermarkets, those kind of things is still only 10% of the overall meat market. And then so basically this packaged and branded meat is growing at around 25%. The overall market is growing at 8%, but packaged market is growing at 25%. And including the tier 2 cities is contributing majorly to the packaged food, packaged meat. Product offerings, these are the main offerings they have. and they have 100K SKUs across 8 categories. So again, their main uh, claims are chemical free, same day delivery, cold chain logistics, farm sourced. So basically, they have tie-ups with the farms and farmers, and they actually detect the the quality and the all the other things, like it should be chemical free, hormone free, antibiotic free. They source it from them, and then they actually process it to make sure of the quality, and then they sell it to customers. So this is their B2C category, like direct to customer. And in the B2B category, they actually provided to Horeca, hotel, restaurants, and uh, I think yeah, I think hotels and restaurants mainly. And like and they also supply to this hype, like through Hyperpure. Like Hyperpure is Zomato's subsidiary, which supplies to like restaurants and hotels. And then again, Zepto also has that kind of a business, like subsidiary, which actually supplies to hotels and restaurants. And so there are a lot of other restaurants mentioned here, like some names like Nagarjuna, which is in Bangalore. A lot of things I like which are you might have seen. So they have so B2B basically gives them like kind of stability over the, or like sales, compared to D2C. Like this could actually this is definitely growing faster, B2C. But B2B will give them a stability in their revenues, because they have contracts for long term, and and so this is both B2C. And so current revenue mix is around 50% B2C and 50% B2B. So B2B was around 30% earlier. Now they have, like this half yearly, they have said that they have increased to 50% B2B. And so like margin wise, net margin wise, they're both almost on same par actually, like except small marginal difference. They say it's the same. Like business process, as I said, they actually have a network of farmers. They like farms and farmers, they source it from them, and then they process it, and then they actually may provide the last mile delivery. Okay, so direct farmer procurement, make the quality checks, efficient operations, and they also all the digital management of like tracking the products, all those things they take care. So guarantee, so what it gives is guaranteed freshness, chemical free, and preservative free products to the customers. So management team, Dipanshu Manchanda is the actually managing director. So he's a highly experienced guy. He's got MBA from Preston University, US, and he also been in working in the MobiQuick, and also he's the co-founder in one of the co-founding teams in the Licious company. So overall, as you see, all the management team is really highly experienced, and I think they are doing a very great job till now, actually, based on the figures. So yeah, so Zapfresh advantage, so experience management, farm to fork business model, like fresh and processed meat from farms directly to the consumers, high quality innovative farms, quality assurance, hygiene, maintenance of hygiene, and then cold chain supply efficiency. So they have their own cold chain facilities, a lot of places. Actually, that is so they actually procure it from there, and I think that is one of the like like that makes it a bit capital intensive business, because setting up cold chain facilities, warehousing, and all those things is bit takes a lot of capex. Um, I think I think I'll come to that point later. Um, and then yeah, so basically another USP is that you could actually track where your meat comes from. So this is actually very important, considering these days, like all the, like, bird flu diseases, like, after COVID, you should be able to, like, know from where your product has come, to make sure that it has come, whether it has been infected or not. So though that is actually is a very good, like, important, like, people these days would prefer, compared to an unorganized, buying it from a butcher shop or an unorganized market. So fresh meat delivered to your doorstep. And then so yeah, presence, currently their presence is in very few cities in India. Like, they started in Delhi initially, and then they have expanded to Mumbai, Bangalore, Haryana, and Uttar Pradesh. So currently their main major thing is, more than 50% is coming from Bangalore and Mumbai. Okay, so in fact, Bangalore, they actually recently started, and they have grown it very fast, mainly because of some like, they started by doing some inorganic acquisitions. So, like, they acquired some companies, and then they turned it profitable. So similarly in Mumbai, so they know how to turn around companies. So they actually buy companies which already established, having a customer base, and they turn it into a profitable business. And so that, and then they are able to expand into new cities very fast, because of that. So business strategy. So yeah, as I said, they initially started only with Delhi, expanded to Uttar Pradesh, Karnataka, and now Mumbai. And now they are actually expanding, with the recent IPO funds. They have actually expanded to eastern side also. So they have started, the cold chain. They are coming up with a cold chain facility in Orissa, I think, which is supposed to cater to the eastern side. And so that is their plan. Yeah, so IPO proceeds, scaling operations in East India, like, setting up cold chain facilities in Orissa. And then so they raised around 59 crores in the IPO. And so they have, which is used for scaling capex operations, working capital, marketing spends, and customer acquisition. So that is their use of the money. And then business strategies. Yeah, so another thing they're trying out is converting the existing this butcher shops into brandized Zapfresh meat stalls. Okay, so basically what this provides is, like, they have, like, this is like the Oyo model, like, where the existing rooms, they go and actually brand it to with Oyo. So similarly, they have this kind of model where they go and convert this existing meat shops. They stand So basically, this gives them, instead of a standardized experience to the customers. So, like, they certified and licensed products, better package and hygiene. And another thing that helps the companies to create their own brand. So it is actually, it's like helps like a marketing thing, because if you have offline stores, and then they also give technology, like, application for the customers, like, so people can directly order from these shops, nearby shops. And so this the existing meat shop owner benefits by, like, one is like, licensing and hygiene. And then with the technology help also, because customers can, instead of going to the store, they can directly order through the application. So current pilot, they started with 15 stores, and then they are planning to scale massively in the next financial year. So it's still in pilot stage, I think. It's not much information is available. And so once it turns out to be a good pilot project, I think they would actually massively expand it to all other cities in the other places in India. So Zapfresh becomes supplier, provides a B2B technology app for seamless ordering, branding, or recall benefits at the neighborhood level. So this is how they do it. Like some stores in Bangalore, photos of some stores in Bangalore. So and then industry momentum. Yeah, this I think I already mentioned. 90% is still unorganized market, growing at 8 to 10%, and the expansion of like $55 billion today until 114, changing lifestyle, digital platforms, all those things. Yeah, so this is a very good metric actually, where monthly orders, this is for H1 FY26, monthly orders is around 1.4 lakhs approximately, and downloads is around more than 1 lakh, and average value order is 540, cancelled orders less than 0.5%. And then repeat customers, this is very, very good. 90% of them are repeat customers, and cost of acquiring customers is around 250 to 300 rupees. So with the 540 rupees average order value and 90% repeat customers, these are very good numbers for a retail company like this Zapfresh. So half yearly results, where you can see H to H, there are almost a 40% increase in the sales, and net profit also almost tripled here, and EBITDA also almost tripled. And in fact, H2 is actually seasonally stronger for them. So, latest con call, they said that H2 would be even stronger for them compared to this H1. Mainly because H1, a lot of festivals came this time, and also due to winter and less festivals, H2 will be stronger. So they're expecting even better sales for H2. So profit and loss. Yeah, this is yearly thing, and so if you can see, they have been growing at almost 30% CAGR. Sales has been growing at 30%. Profit has been growing really very 97%, 3 years. So yeah, coming to the risks, highly vulnerable to of course, like bird flu and those kind of things happen. I think these are the first companies will take the hit, and there could be a huge down in their balance sheet. High working capital required for smooth because of they whatever they sell on the online. I think the realization would take few days because people would be paying through credit cards and all those things, but they have to manage the delivery partners. So I think OPEX expenses will be a bit higher always, and it could keep on increasing as they expand. So it will keep on increasing as the business expands, and capital intensive for capex also is very high because of cold storage required, and then any wastages also wastages will be high, could be high, because if for some reason there is a lean period, whatever they procure from the farmers then can go waste. It cannot be reused or sold anywhere else. Look out for so basically what to look out for is increasing debt in their balance sheet, and then quality issues or decreasing repeat customers. So these are the things to look out in the coming quarters or the half yearly results. So and then from the DHRP, I found some things like where they have some outstanding litigations. So company has around 17 crores of outstanding litigation from them, against them, and so I don't know about full details about this, but this is something to, but it is not a very big amount. I think, and they're all tax proceedings, so I think they might be contending for them. and whatever results come out, I think there could be some hit in some half yearly results if this goes against them. And then there is a tax demand also from the income tax department of 8 crores, and I think they have justified that in the latest con call. They said that it was some related to some equity investment which was wrongly categorized by the government. So I think they are already contending for that. Mostly this might not be a big issue. So this is around 8 crores. Yeah, around 6 crores actually. 6 crores for, sorry, 8 crores for FY25. So next is, yeah, so these key ratios of cash conversion cycle and all, they have increased a bit in the latest March 2025 results. And I think there are some explanations in the con call for that. They said about working capital days elevated due to deliberate extension of credit to B2B clients to support growth and service reliability. And and then they have actually given a projected figure for this trade receivables. Trade receivables suddenly shot up in FY25, and they are actually they did not give an exact explanation of why it is, but they are projecting it to bring it down to 30 in the next FY26 and 27. And then trade payables, it's been reduced considerably, and basically trade receivables they have reduced so that they get a better pricing from the farmers. That's why trade payables have been reduced. And then working capital days also has increased, and I think they have given some explanation in the con call on why that is, and their plans to reduce it in the future. Again, cash flow has been always negative. That again they have explained that it is because of the high trade receivables and security deposit towards brand building. So, but it is not very high. So I think it is compared to the sales, I think it is very small amount. So I think it should be okay. So I think these are the things that one has to look into from the risks perspective. And peer comparison, these are the peers that is mentioned in screener, but they are not apple to apple comparable, because none of these are into exactly same as Zapfresh. They are basically SKM, Obel, and Simran. They are mainly into eggs and poultry only, and they don't have this kind of online retailing like Zapfresh. Direct to consumer they don't have. They generally sell it on Blinkit and like quick commerce and Amazon, but it is not exactly comparable business with the Zapfresh. So actual peers are Licious. They have both similar to Zapfresh. They have online retailing as well as branded retail stores. So unlike Zapfresh, they have their own retail outlets, and they actually have a broader reach across the India compared to Zapfresh. You can see it in all over the cities actually compared to Zapfresh. And then there is another company called Fresh to Home. This also is unlisted, and but I couldn't find much information about this company. I think they are mostly into exports to UAE and all those countries, but they are still available in India as well. And third one is Chata Foods. Chata Foods, again, it's only B2B. And they actually cater to all this quick service restaurants and and then other restaurants, hotels, those kind of they only do B2B. So this is my investment. My investment thesis is based on valuation. Like what I found, I think I might be totally wrong with this calculation here. So I think people should cross verify before using this. For FY24, the revenue was around 687 crores, and they had a loss of 298 crores in FY24, and valuation based on its last funding round in 2023 was around 13,000 crores. So their market cap was around 13,000 crores based on in 2023. So they're based on that, the sales to market caps to sales actually comes to around 20x. So that is the current value, Licious, and so comparatively, Zaprush is very cheap compared to Licious, because we don't have any other exact comparison. So I use this Licious comparison, like they based on their funding round, how cheap it is. So currently, based on their current metrics, Zapfresh comes to around 2.5x market cap to sales, and it is a profitable company. So even both Fresh to Home and Licious are in huge currently burning cash. They're loss-making companies today, and only compared to that, Zapfresh has been profitable. At least from 2024, I think they have been profitable, and they have a very good business model, which is focused towards profit. And then, so I see a good valuation comfort compared to the peers like Elicious and Fresh to Home. And then total addressable market size, very large TAM, and package meat growing at 25% CAGR, low organized penetration, and then rising urban incomes, convenience. People are looking for convenience, food safety, trusty, and preference for packaged traceable meat. Okay, so that is the reason, another reason. And then growth aspects. Recent con call, they said they have a revenue ambition of 1,000 crores. So today it's around 160 crores. So their ambition is, I think, another 20 FY 28 29. The ambition is to reach 1,000 crores. Because it is quite aggressive, but it is because they're aggressive because of they're not only growing organically, but through acquisitions they're growing. And that is the current ambition they have. But if you consider with the total addressable market size, this is still a very, very minuscule number. So management affirmed the feasibility of 150 crore. Today they're making around 50 crore per city, sales around 50 crore per city. They're saying that they can easily reach 150 crore per city in existing metros without heavy marketing, and expansion to new cities apart from growing in. So there are a lot of cities still to be covered in India. Like currently there are only 3 or 4 major cities in India, and still a lot of cities to cover, expand to, and focus on profitability. So the way they unlike Licious or Fresh to Home, where they spread the thin all over the city, they actually have they service only a selective pin codes. So like basically currently where I am staying, I stay a bit outskirts of Bangalore, so I see that they don't deliver here. So they deliver only particular say pin codes in the city. So they actually so thereby their focus is always is on profitability, not just covering all over all the city areas. So that basically the high density, they're targeting high density zones. Inorganic growth. Yeah, so basically they have they buy turnaround companies, and they make it to profitable. So for example, like they entered Bangalore market by acquiring Dr. Meat and Sucos Foods. So approximately 4x revenue growth within 1 year post integration. So they convert, after just 1 year they have turned it into profit, and they increased the revenue by 4x. In Mumbai, they acquired this company called Bonsara, and it was a D2C company, and turnaround from loss making to positive margin in 1 year. After Mumbai contribution increased from to 21%. Earlier, Mumbai was only contributing 5% to their overall sales. Currently, it has increased to 21% in 1 year. So they are very good in acquiring these companies and turning around. So they have shown it with multiple, small projects here, like two of them in Bangalore, one in Mumbai, and then the current con call they said that there are two acquisitions in advanced stages in the north region, and they're basically catering to export markets and domestic and non-meat they are getting into non-meat categories also, which is into snacking, dry, ready to eat, ready to cook. Big size compared to last acquisition. They said it's almost compared to the previous acquisitions, it's very big, 10x of the earlier size. And how they are funding it is through internal acquisition and private placements. So there is no debt involved. And the real inorganic growth spurt will be seen in the next financial year. Like all these acquisitions will start materializing from next year results. And then ready to cook and ready to eat, easily scalable online and all over the country. And then B2B technology app launched for hotels and restaurants and small retailers to streamline ordering and operations. Okay, so basically for all the B2B, also they have a technology app, where the hotels and restaurants can directly order from them. So similar to the one they have for the B2C. So technically, so there's nothing much chart available. So whatever is available, I see that there's currently moving in a small channel here. It's not few days, like maybe 2-3 weeks chart, and I like it is. I think my understanding is there is a lot of consolidation happening here, and for me, this red line is actually I consider will have. I think if it closes below this red line, I think it will be very weak, and because the next support is around back to its IPO base around 120 levels, and I would definitely reduce positions if it closes below this red line. Uh, but I think it will not, because considering the valuation, if valuation comfort, like compared to Licious and other companies, it's already trading quite cheap. Um, but yeah, like we never say, like, because SME and very small any small amount can be used to pull down the bring down the price of the company. And so if you see the shareholding pattern, promoters, basically Deepanshu Manchanda is the main promoter. He's holding 28%. And then public, there is a free float, big free float is available, 50%. There are a lot of public holders internally, but we would say 50% is still held by public. So, it could be a bit volatile. Uh, Pricing could be a bit volatile. So I think, yeah, this is the end of my presentation. And yeah, so basically, please, since it's SME, please do research well before if you need to invest. So any questions?
Very good, Sunil. Awesome presentation this time. And I think it's a new category, and you have done the good comparisons between listed, unlisted as well, and shows the side why it is cheap. Of course, there is a competition as well in the market, but I think you nailed the presentation well. Guys, any questions for Sunil? So why do you see this Swiggy, Zomato, or other places cannot compete with this? Licious itself is doing it. So do you see this competition will not grow bigger and eat up the margins for this company?
Yeah, basically one thing is all this cold storage requirements, right? Because all this the all this meat, actually they need to be preserved in cold storage, and so they might not be able to guarantee the quality, like what these guys can do, like how Zapfresh can do. So that is one reason. I think that is the main reason why it is not directly sold into in Swiggy, Instamart, or Blinkit, those kind of places. But I think they have this ready to cook and ready to eat. I think they might definitely sell it over there, RTC and RTE products.
Okay. Yeah. Any one last question from the audience? Okay, doesn't look so at this point. So thanks, Sunil, for this presentation.
Yeah,
Really looking forward to read from my side as well again.
sure, yeah.
Thank you for putting your hands up. Yeah, so I think that concludes our day one. We presented 7 companies. The idea was ALD7, 7 companies each day. That's how we thought of. So finished 7 on day one. So let's meet tomorrow at the same time. And till then, please have a detailed analysis of what has been discussed today. Thank you all. We'll close the session here.